for October, and I hadn't checked. It was in the low 40s or upper 30s when it came to the possibility of it for December. I'll look at that. There it is. It's at 40% right now. And he mentioned a few things about this quantitative easing thing. He wants to increase the reserves in the system to get rid of the problems that led to in the repo market, but announced a very modest amount. They want to bring it back up. So he said, this is not quantitative easing. And as a joke, later on, he said, did I mention it was not quantitative easing? So to be clear, guys, that what he's doing here is in order to affect technicalities in the repo market, not to affect monetary policy.
But Steve, it's also certainly not quantitative tightening.
Oh, yeah. No, there's no doubt they've reversed that in a big way, Wilf. If your point is that they were headed to a smaller balance sheet. Look, I think every observer out there on the street, and I don't know the extent to which the Fed acknowledges it, Wilf, but they got it wrong. They misunderestimated the amount of reserves that were required in the banking system to keep the Fed funds rate where they wanted it to be. They need to put more liquidity into the system, and now they're trying to figure out how much. He did announce today, rather definitively, Wilf, that they will be putting that money in the system.
Steve, thanks so much for that. Josh, I guess it's a great snapshot of two competing forces on the market. You get a positive, more dovish tone out of the Fed, but you also offset it with something that worsens the trade atmosphere at the same time.
Potentially, but I do agree with you. Those seem to be the two poles, and we're oscillating back and forth between them on any given day or week. I think something interesting to point out, the Dow is now flat over the last 1, 2, 6, 12, and 18 months. Has gone absolutely nowhere. My friend Jonathan Krinsky at Baycrest points out, as of today, we are right smack in between the 50-day moving average and the 200-day. And what that means for the average investor and for professionals alike is that extreme opinions in one direction or the other are not being rewarded. And if you're acting on extreme opinions at the top of this range we've been in or the bottom, likely you're chopping yourself up and you're not doing yourself any favors. And that has been the story going back to January, February period of 2018, since the onset of the trade war and that rhetoric really being dialed up, and then the subsequent tariffs. So that has not changed. I hope it changes. But what is interesting is, while that's happening, you've got very large, very liquid S&P 100, S&P 500 names, household names, making new 52-week highs and in some cases all-time highs. So I'm thinking about Nike and Apple, D.R. Horton, Chipotle, Hershey. These are companies where people are saying one of two things, Wilfred. They're either saying things are not as bad as people are starting to feel, and I want to be in these stocks, or things are getting bad, and these stocks will be a safe haven. These companies will navigate what's to come better than other companies. And I think choose your own adventure as far as which side of that you're on. There are some things looking really good, though, in the chips. I just want to really quickly spotlight chip equipment, AMAT, Lam Research, KLA-Tencor. These stocks are making new all-time highs. It's not an accident. There's something good happening in various parts of the market. It's just not the entire market.
The market's certainly been oscillating today. The range on the Dow down 59 at the top of the performance, down 340 at the low, and we're basically bang in the middle of that at the moment, down 165 points. Let's get more analysis of Chair Powell's comments with Frederick Mishkin, former Federal Reserve Board Governor. Thanks so much for joining us. What's your take on, let's start with this announcement to begin asset purchase again. Is it fair for Chair Powell to say loud and clear this is not QE, or do you take a more strong dovish hint from that announcement?
No, I think that this is absolutely a technical matter, that the Fed has decided that they want to run monetary policy with a large amount of reserves in the system so that you don't have these kind of spikes in interest rates. And they did make a mistake here, but this is easily correctable. That they thought that they could have a smaller balance sheet to do it. They found out that they can't, and they're going to basically get it back up to where they need to. And they'll do a little bit with experimentation. So this is not a monetary policy event at all. It's purely a technical issue. And really, from that viewpoint, it's one that they can easily solve. But, it's going to take a little while to get it exactly right. But from the point of view of the economy, it's a minor issue.
As you listen to his speech and the Q&A, anything give you a hint about what his action may be and if it's changed? He did note that the economy feels sustainable, the consumer is solid. He says there's healthy job creation, but it looks like the Fed fund futures are moving a little higher, thinking there's going to be another cut here soon.
You know, I think that there's just a lot of forces moving in different directions. So the labor market's very strong. We have unemployment rates now that are at the lowest level we've seen in close to 50 years or near 50 years. So this is really good news. On the other hand, manufacturing has been very weak, and all of this, of course, is related to what's happening in terms of trade. And then we also see that this trade problems are actually hitting not only manufacturing in the U.S., but it's certainly hitting exporters in the rest of the world. And so from that viewpoint, that's something that actually the Fed is very worried about. And I think it's one of the key reasons the Fed has actually lowered interest rates already.
So what would you do if you were voting?
So, you know, I tend to have a different view on the way monetary policy should be conducted right now. I actually would be in the camp of that I think that rates should not have been lowered yet. And the reason is that we really don't have any information that, in fact, the economy is going south. It is true that the inflation rate's a little bit on the low side, but not clear that it's not near where we want it to be or will be in the near future. So from that viewpoint, I would rather see the Fed take the following stance, which is that right now the information is not in that we have a big problem in the trade front, because every day we get a different view, and that's why one of the reasons the stock market reacts one way one day when they think things are going to get better on the trade war front, and then reacts very negatively on another day when they think that things are going south. So from that viewpoint, what I think is much more important is that the markets have confidence that the Fed will be very aggressive and do it in what I call a very nonlinear fashion. In other words, not do it gradually if, in fact, bad news starts to come in. But, in fact, better to wait until you do have some bad news. And I don't mean by bad news saying that we have to see that the economy has gone into a downturn. It can actually be that something really bad has happened in the trade front that indicates that there's no way we can avoid a trade war, for example. So from that viewpoint, I think that the better way for the Fed to operate right now is to communicate better how it will react to future data. So it's not particularly helpful when a chairman says, we'll act as appropriate. That, to me, says absolutely nothing. Much better, I think, would be for the markets to understand how the Fed will react to data as it comes in and to economic events as they come in. And that's not something that Jay Powell or the Fed has been willing to do, and I think that's too bad.
Frederick Mishkin, thanks for joining us.
You're very welcome.
We are down 0.9% on the S&P 500, 28 minutes left of trade. Still ahead, China front and center as trade concerns flare and companies face fallout over the Hong Kong protests. Former HP CEO Carly Fiorina will weigh in ahead.
And as we head to break, here's a quick check on bonds today. Treasury yields ticking lower once again. The 10-year yield sitting firmly below 1.6%, sitting at 1.532 at this very moment. Stick with us. Closing bell. We'll be right back.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited. The chance of being hurt while using a leaf blower is about 3,000 to 1. Ooh, unlucky. Never mind, at Curry's PC World, there's a 1 in 10 chance to get half your money back on all 2019 LG OLED TVs, like the LG C9, described by Which as simply the best. Get blown away with Apple AirPlay, Google Assistant and Amazon Alexa built in. And there's up to £500 off. So the question is, are you feeling lucky? At Curry's PC World. T's and C's apply. GB16 plus. See currys.co.uk.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
It's Liz Hernandez with your TuneIn Music News Update. Taylor Swift tells Rolling Stone magazine that living a quiet life still causes drama. She says, I decided I needed to live a quiet life. I didn't realize I was inviting people to feel they had the right to sort of play my life like a video game. Meanwhile, the Daily Mail claims Ed Sheeran has donated 18 pairs of his old slippers to charity. Most of the Nike, Dolce & Gabbana, Converse, and Air Jordan slippers are expected to sell for as much as $250 a piece. For music from Taylor Swift and Ed Sheeran, search today's hits on TuneIn.
TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live. Regular season matchups and rivalry games, conference championships and bowl games. The college football playoff.
Throw it. He's got it on his stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Less than 25 minutes left here to go until the closing bell sounds. Here are the three things driving the action, all related to trade. The White House has expanded its blacklist of Chinese companies, ratcheting up tensions as tariff negotiations continue in Washington. There's also another report the administration is moving ahead with efforts to limit capital flows to China. And then just a few minutes ago, the State Department announcing it's imposing visa restrictions on Chinese officials.
Time for a CNBC News update with Sue Herrera. Hi, Sue.
Hello, Wilf. Hello, everyone. Here's what's happening at this hour. Senate Minority Leader Chuck Schumer pushing for a nationwide ban on flavored e-cigarettes. It's part of his plan to curb vaping among young people.
At the federal level, ban the flavors that aim these cigarettes at kids in high school, middle school, even younger. Ban it. And the good news is we have bipartisan legislation. This is not a partisan issue.
Some new options are coming to the ACT college admissions test. Beginning in September of 2020, ACT will introduce individual section retesting, online testing on national test days, and superscore calculations. The three new options will enable students to improve their test-taking experience and also increase their chances for getting into college and available scholarships. Speaking of which, Oprah Winfrey visiting Morehouse College in Atlanta on Monday to honor the 30th anniversary of her scholarship program. She previously donated $12 million to that scholarship, but she surprised everyone today with an additional $13 million, making the total investment $25 million. You are up to date. That's the news update this hour. Courtney, I'll send it back downtown to you.
I feel like Oprah surprises are the best kind of surprises.
Yes, they usually
good.
are.
You get a scholarship.
They're always good.
You get a scholarship. I love it. Thank you, Sue.
You got it.
We have about 23 minutes left to trade. Let's send it over to Mike Santoli for today's first market dashboard. Hi, Mike.
Courtney, hi. One of the bright spots in today's market, mostly down, but Microsoft has been pretty firm. It did get an upgrade from an analyst with a price target of about $160 a share. That turns the Wall Street consensus on Microsoft stock almost universally positive. So here's a distribution of overweight or buy ratings, hold ratings, no more sell or underweight ratings right now. So that shows you just about everybody says buy this stock. Now, the difference between the current stock price and the consensus price target, really not that high. It's only about 8%. Maybe that's because this is already a $1 trillion plus market cap company and people recognize it's had a great run already. But look at a very long-term chart of Microsoft's valuation. Because it has rebuilt this valuation. This, of course, coming right off the tech bubble. That's when it, by the way, was worth $600 billion briefly, a much bigger part of the overall market than it is right now. Then you had this long stagnant period. Now it's rebuilt back up to about a 25 times price to earnings multiple based on forecast earnings. Obviously seems like a premium valuation relative to the market, which is at around 16 or 17, but arguably it's justified. People want stability. They want a great balance sheet. I guess the big question is what yet is undiscovered about the Microsoft story that people have not yet recognized. Therefore, it will be the source of much further upside from here. That's what we'll have to see, guys.
Mike, I love this, and obviously we did this with Apple yesterday. Yep. Where is the sort of median average price target for all those
it's about
huge number of
157 or 158 right now. So it really is not that aggressive, but that's really because the stock is kind of caught up to some degree to those price targets.
But it's sort of those, a lot of buys, but people sort of sitting on the fence. No one's aggressive.
They haven't had an impetus to raise the targets very aggressively. That's right.
The big takeaway for me is that Steve Ballmer's legacy should be revisited. He took this company over at a 60 multiple. He had no shot to make this stock go up. And actually, earnings, I think, doubled while he was the CEO. He just had the unluckiness of getting the reins from Bill Gates in 1999, literally the worst period of time you could take that company over. And he did his job, and he obviously missed some big things like social media. The Zune was hilarious, but he did a good job. There was just no chance for shareholders to make money with that starting valuation. So if you're watching this, the takeaway is not how good or bad is the company. It's what starting valuation are you coming in at? Because you could be in a great company and buy it too expensive and sit for a decade and a half before it makes you money again.
You also have to give Nadella some credit too.
Of course.
I know, I'm just saying.
They're both great. You know me.
Bill
I want
Gates
everyone
was
to
a
win.
smart guy too.
Yeah.
For sure.
They've all done well.
For sure.
Mike, thank you. We've got 20 minutes left of trade, and we are currently down 241 points. During Fed Chair Jerome Powell's speech, we got back to only down 59 points, but we are selling again as we approach the close, down over 1% for the S&P, the Nasdaq, and the Russell. Coming up next, we've got your last chance trade. Don't go anywhere.
CNBC Sector Sword is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Right now, the future is being written by people like you. Creative thinkers, tech lovers, problem solvers. Are you going to stand by and watch? Well, show the world what you've got. Join others around the UK on an EY degree apprenticeship in digital and technology. And earn a salary working with exciting businesses while studying towards a degree. Don't let the future pass you by. Get involved. For more information and to apply, search EY Digital Apprentice.
Watford, it's chilly outside, and you're staying in with your feet up, and they can stay up. Because with Hive Active Heating, you can set the perfect temperature without even lifting a finger.
Alexa, ask Hive to boost my heating.
And by never having to heat an empty home, you could save up to £120 a year on your heating bill.
Alexa, play my Nice and Toasty playlist.
Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Next time you look up at the stars, think about this. Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
The MLB is in full swing.
Looking up, and this one is up and out. A home run.
Swung on and into the air to deep left. That ball is high. That is far. That is gone.
To listen, just search MLB Today on TuneIn Premium so you don't miss a moment of the games on TuneIn. TuneIn puts you on the sideline for the 2019 college football season free all year long. With college football on TuneIn, hear the home and away call for more than 140 schools live, regular season matchups and rivalry games, conference championships and bowl games, the college football playoff.
Throwing. He's got it in the stiff arm. End zone. Touchdown.
You can listen to it all for free at home, on campus, or on the road. Hear the excitement and pageantry of college football all season long, free on TuneIn.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Welcome back. We've got 16 minutes left to trade. We are down 254 points on the Dow, full percent, over 1% for the other major indices, and we are softening as we approach the close. Time for the last chance trade. Josh, what are you going for?
I would like to discuss NVIDIA today. I think I'm long the stock as an investor, but I think there's a trade coming up here as the stock breaks back above $190. A year ago, it started a 56% decline from an all-time high all the way down to that low. There's a huge gap in the chart. Stock has spent the entire year working its way back up. And now, above 185, 190, you really don't have any resistance. I think there's a clear shot up to 230 if it can break above that level. As far as downside, you're going to want to use the bottom of that big gap down, which is 170. So you're risking 10% to potentially make 20%. Yesterday, big upgrade for NVIDIA, talking about their two key markets turning the corner. Gaming is very important to the company, but also the enterprise cloud. And that looks like it's bottomed and it's going to start to turn upward in the fourth quarter.
So Did you get this idea by watching Closing Bell yesterday from Dan Nathan?
No. I love Dan Nathan. What did he say?
No, I'm saying he called for it as well.
He's like, I like NVIDIA. I think it's a good buy here. You can play with the options. Don't get me wrong. Play with the options. All right, shout to Dan. I like the stock. I've been in the stock for 4 years now. But I like the stock as both an investment, but from a short-term trading perspective with a defined downside. You'll know you're wrong at 170. That's where you're getting out. You could stay long for a long time, though, if we don't see those levels. I mentioned some other chips that look good earlier in the show. This is a sector that is very important to the market. So I like to see the action in this stock specifically and the group in general.
Got to get more of those impressions later on as well.
Yeah,
Dan is my best one.
I know.
There you go.
That was very good.
Oh,
Stick around for 5 p.m. Fast Money with Dan Nathan later today.
Well, this is the last commercial that we are going to take here before the close. We're going to take you inside the market zone. That's when Closing Bell returns.
It's Liz Hernandez with your TuneIn Music News Update. Kelsey Ballerini and Halsey are doing a CMT Crossroads together. And not surprising since Kelsey posted clips of them doing karaoke. They're taping the episode on October 11th and it'll air early next year. Speaking of country collaborations, Tim McGraw posted a video on Instagram of what looks like him and Shy Carter rehearsing in an empty arena. They're on stage performing their new song, Way Down. To hear music from Kelsey Ballerini and Tim McGraw, search Country Roads on TuneIn.
From the TuneIn Studios, I'm Fonseca with your daily sports update. Major League Baseball Division Series continues. We've got Game 4, the Astros at the Rays. That's at 4:15 p.m. Eastern. The Houston leads 2-0 right now.
Our best games that we've played during the postseason, we strung at bats together, and it's trying to put up a good at bat for the next guy. If we keep continuously putting up good at bats, the next guy will come through. When we have that mindset, we're a really, really, really good offense.
Find this game, search MLB, and favorite your team. That's your TuneIn Sports Update.
MLB is right here on TuneIn.
A swing and a drive to right field. That's it. Well, Ramirez back, and that ball's gone.
And to find it all, you need to search MLB on TuneIn.
By the wall, out of here.
Home and away calls are a click away on TuneIn Premium.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Requesting time off? Well, that's a pain.
Clocking in should be easy, right?
First I have to print a
Wrong.
form, fill it
I
out,
think I'm
and then
getting
go give it to
carpal
my
tunnel
manager.
from stapling receipts to expense reports.
I wish I had 10 more passwords at work. My HR app is user unfriendly.
It's frustrating.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out.
I got a new grill.
And you should be mad your smart fridge is unnecessarily complicated.
Make ice.
Making ice. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading today.
The Market Zone is sponsored by E-Trade, now with commission-free trading.
We've got just over 10 minutes left in this trading day, and we're now in the closing bell market zone. This is commercial-free coverage of all the action going into the close.
CNBC senior markets commentator Mike Santoli is here to break down the crucial moments of the trading day. And today we've got Josh Brown from Ritz-Holtz Wealth Management as well. Fed Chair Jerome Powell speaking at the annual National Association for Business Economics meetings earlier today about the Fed's balance sheet.
Growth of our balance sheet for reserve management purposes should in no way be confused with the large-scale asset purchase programs that we deployed after the financial crisis. Neither the recent technical issues nor the purchases of Treasury bills we are contemplating to resolve them should materially alter the stance of monetary policy.
Mike, we're down 1.4% on the S&P 500 again today, quite near the session lows. Originally, when he announced that, the market got a lift, and then we lost steam after.
I think the market just sort of liked the general message of flexibility. It clearly is wide open to further easing moves, and then having something more permanent just to kind of make sure this overnight funding stress in the bank system get out of control. I think that was all to the positive, but then obviously we got these new headlines on the visa restrictions on Chinese officials. I do think that kind of just sets in this sense that it's a Cold War of sorts with China, and let's forget about looking for some big deal.
And Josh, you liked what he had to say about the yield curve control, or at least that piqued your interest.
Well, I think it's interesting that, what was his exact comment, that they were going to look into whether or not they can more directly try to influence the yield curve. And I know there's a camp of people that would say it's manipulation, but that's all the Fed does is manipulate. It's like in their job description. It's not against the people for them to be trying to manage various parts of the economy with monetary policy. So rather than play games and jawbone it, maybe doing something more direct would be a change of pace and potentially could work in short-term situations where necessary. So the yield curve did invert in the second quarter of this year. We are technically on the clock. Historically, you've had somewhere between a year to a year and a half before the onset of recession. The longest period of time you've had is 21 months. So if the Fed is looking at things like that, it's not that the yield curve is causal when it inverts, but I just think it's interesting that they're pursuing some of these avenues to look at various aspects of monetary policy that they haven't looked to influence directly before.
And we did see yields move lower as he was speaking. Well, Chinese stocks are under pressure today from a number of hawkish headlines, including earlier this hour an announcement that the State Department is imposing visa restrictions on certain Chinese officials. Bob Pisani is at the Alibaba Post with more, she tried to say. Hi, Bob.
More than that, a lot of headlines earlier in the day, and none of them are really very good. So here's Alibaba. A lot of good volume here. Look at 14 million shares. That's good. We're near the lows for the day, 162. We're down about 3.5%. Alibaba e-commerce hasn't done bad this year. It's up about 20%, but the old high was about 190 or so. So we're well off the 52-week highs. Elsewhere, if you look at some other sectors, we see, what else would be down here? JD.com. That's also had a pretty good year. It's up about 30%, but it too has been down in the last several days. Baidu, big internet search company, not had a very good year. Search has not been good in China. That stock's probably down, about 30% on the year. So you got sanctions on big Chinese companies.
Can't fully offset the trade war?
Certainly. I don't think that we had the premise that you could fully offset the trade war, but between that and also just the ongoing debate that kind of rumbles underneath this entire market, which is this a soft landing? Is this just a soft patch in the economy, or is it the end? And is the Fed ahead of it or behind it? I think that's the backdrop. Within that, it's just a trading range. I mean, the stock market has been just kind of knocking around, chopping for 2 months and more, trying to sort this stuff out and remaining supported but not making any headway.
We've got 6.5 minutes left of trade. The Dow is just off session lows. The S&P is at session lows and is down 1.4%. Chip stocks getting hit hard in today's session. Josh Lipton's in San Francisco with more. Josh.
So Wolf Semi slipping today. Check out the SMH, the ETF that tracks the chips, though. Still remember up some 35% this year. Notable underperformers today, though, would include Seagate, Western Digital, Nvidia, Qualcomm, and Micron. Chip investors concerned about those trade talks, specifically the U.S. government now adding those 28 entities to a trade blacklist, including some of China's biggest AI firms. So where do chip investors put money to work now? RBC's Mitch Steves Chris tells me he still likes AMD, and like Josh Brown, he's a fan of NVIDIA as well, betting both those companies take more share of the data center market from Intel. Guys, back to you.
Thank you very much, Josh Lipton. We're going to move now to biotech stocks because those too are getting crushed today. Meg Terrell has the details. Hi, Meg.
Hey, Cort. Well, a major move lower for diagnostics company QIAGEN is weighing on the entire space. The company reported preliminary third quarter results, then missed Wall Street's estimates and announced its CEO is leaving. Now, for the quarter, QIAGEN cited weaker than expected developments in China, which may be part of the reason you're also seeing shares of Illumina, the genetic sequencing giant, sinking. Now, that in turn is weighing on the whole biotech sector, with Illumina dragging down the IBB Biotech ETF. Guys, back over to you.
Meg, thanks very much. We're down 1.4% on the S&P. 5 minutes left. Let's get to shares of Domino's. A volatile day for them. Kate Rogers has more. Kate.
Hey, Wolf. Well, Domino's reporting earnings today missing across the board as the company continues to face pressure from third-party delivery aggregators. Domino's also cut its long-term outlook range into a 2 to 3 year window, saying it was more relevant for investors in this uncertain market. Still, CEO Rich Allison maintaining that a shakeout is coming in the industry, defending the company's strategy of fortressing, looking to carry out for growth and keeping delivery in-house. The stock actually turned positive as he spoke about the new guidance structure on the call. It's up by more than 4.5% right now. Allison will also be a guest on Mad Money tonight with Jim Cramer, so be sure to tune in for that and much more, guys. Back over to you.
Kate, thanks very much. Josh, where do you stand on this one?
On Domino's, I'm not eating it, but anytime a company comes out with what at first blush seems like it's going to be bad news and reverses this hard in the middle of the day, I think you really have to take the buyers seriously here. They are accumulating this name. They used the weakness today and then kept going. You don't see it a lot. Usually a stock gaps up or down, it finishes in that general direction. So if you're not in the name and you're looking for a company that's under accumulation, clearly this is maybe something to look into.
We've got about 3.5 minutes left. Every single sector is lower. Mike, you've been looking at all the internals and how it breaks down.
Yeah, let's first look at the up-down volume. I mean, it has been pretty decidedly to the downside. It was 75 or so percent declining volume in the New York Stock Exchange. That pretty much befits where we are right now. In terms of the index is down 300, losing some ground there. Also, the average stock, the RSP, the equal weighted S&P 500 has been lagging the main S&P all day, and that also shows you that the typical cycle, although the main index is caught down to the other, is suffering a little bit today. So we are under some pretty comprehensive pressure, but again, within this range we've been stuck in for a while.
Mike, in terms of the sector performance, financials at the bottom, they got some reprieve when the yield picked up for that brief half an hour during Chair Powell, but clearly suffering again, and the yields have influenced the overall market heavily.
Low conviction, that has been the story for a while right now. And then, Meg mentioned some of those big medical device names. They've been leading the list of on the downside as well. And then some consumer stuff and tech is holding it up.
And in terms of the individual indices, the Russell once again underperforming, down 1.6, 1.7%.
Very familiar story. The Russell moves with the transports. Even though there's no real reason for that, they're just risk appetite and cyclical sentiment indicators.
Just going to point out the transport's down almost 2% here. We've got 2 minutes left to go. Let's send this over to Rick Santelli for a check on the bond market. We've been talking about it a lot this hour. Hi, Rick.
We have, and remember, buying T-bills is not QE. I have to ponder that overnight. Look at a 24-hour chart of 2-year note yields. After Jay Powell spoke, they made new fresh lows. They're now down about 4 basis points. Remember, 139 is a cycle low close, not far away. 1 week of 10-year, you can see that we are drifting right above the cycle low close from the 3rd of September at 146. Finally, there's the dollar index. This chart starts on the 30th, the day we had the high close, only about a quarter cent away from it. Bertha, lots of thin ice going into the close at NASDAQ.
Yeah, we did see Apple really rise a bit on those Powell comments, but then really see that whipsaw down near the lows of the session on the worries about those new visas against some Chinese officials. One of the worst performers today, though, are really the small and mid caps, and they're weighed down by East West Bank Corp and the regional banks. One of the worst performers, Raymond James, downgrading East West because it also offers commercial loans in mainland China, and they think trade is really going to make that loan growth a lot lower than expected in upcoming earnings. Meantime, Smile Direct Club got better news from analysts. In fact, it sent out a press release saying, hey, we got great analyst cred. But the stock today cratering, about a half a dozen of these healthcare IPOs hitting new lows today. Over to Bob.
And a lot of rough China headlines making it sound like a China deal is not imminent. Cyclicals like industrials had a very tough day, Bertha. If you take a look at Boeing, had a very rough start. But around 11 o'clock, they did get Q3 deliveries reported. The good news was they booked their first 737 MAX order since April. But they also reported cancellations for 22 of its 787 Dreamliners. Had a nice little rally there, but still ending towards the lows of the day. Other cyclical names had a tough time of it generally. Of course, bank stocks moved down. JP Morgan moved down, along with Goldman, some of the other names. And we saw some weakness in some of the other industrial names, like Caterpillar, for example. There's the Dow Jones Industrial Average. That's the close, down more than 300 points. We faded into the close as the announcement on visa restrictions on Chinese officials hit about an hour and a half ago. Dow closing the day down 320 points.
Good afternoon. Welcome to the closing bell. I'm Wilfred Frost.
And I'm Courtney Reagan in for Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator. We're in the market zone. You can see the day's market action on the right side of your screen with the stories still coming up on the tabs.